We've got Sterlite Technologies in the spotlight. Let's find out their order book outlook, what the guidance is when it comes to the revenues, as well as whether or not Q4 is going to be any different. Ankit Agarwal is the MD who is now joining in on the show. Thank you so much, Ankit, for taking time out. Now, your optical margins have been a bit flat at a time when we've seen the raw material prices having corrected quite significantly. So what's the reason for this, and have realizations almost peaked?
Yes, good morning. Thank you for having me on the show. So firstly, our ambition in the optical business is to be world top three. That's really where we're really looking from a long-term perspective. Within that, what we've been guiding is that optical business will be north of 20% EBITDA. And that's something we continue to maintain and showcase. One of the areas specifically that we're looking at continuing to grow is on the back of very strong order booking, both in Europe and US. So that's something that's working well for us. On the positive side, we've seen some of the benefits of container prices coming down, as well as some of the raw materials linked to oil. But on the other side, we've continued to see some spikes on the gases, particularly like helium, which have continued to increase. So that's something that we're looking to explore and how to reduce those costs. Overall, going forward, we're also looking to increase our attach rate and sales of our interconnect business, which should hopefully improve our EBITDA margins and take that up from here.
So, just wanted to understand how is it that we should be looking at margins for the services business in particular going forward? And the other thing, of course, the markets want to know is also about your fundraise for capacity addition, or whether it's going to be for deleveraging.
Yes, absolutely. So I think in line with what we've been sharing on the services business, there's two parts to it. One is structurally, we're looking at focusing more of new projects towards the private sector versus the government. The second part is we're also looking at our UK business, which is currently loss-making, and seeing how do we turn that around and drive that towards right profitability, which we believe will happen in the H1 of next year. And the third one is going forward, we are focusing much more on the profitability and cash of the projects going forward vis-a-vis top-line growth. So that's something that's very clear to the teams, and that will help us drive towards the 10% EBITDA margins going forward. It'll probably take about 6 months to get to that level, but that's how we're driving it. In terms of the rights issue, we have looking at a 500 crore rights issue, which is fully backed by the promoter in terms of participation. And we're looking at that largely as a deleveraging. And on top of that, we're also looking cash flow from operations to further improve our leverage, as well as to improve and focus on our focused expansion on our cable and interconnect.
Heard you here say 5G as yet, Ankit. We'll get to that in just a bit and what the specific plans are, but I'm just staying with the earnings. If I look at the revenue market share, and particularly from the United States, it's a decent increase, 11% in what we've seen earlier to 37%. So let's remove 5G and India and what your plans could be. US, the big focus, and is that the way to path to higher profitability, higher revenues?
So, definitely we'll touch on India, but I think, as I said, that both Europe and US have been very important focus markets for us. We're continue to be quite bullish in terms of next 3 to 5 years investment, particularly in fiber networks. As we speak in June, July of this year, there'll be a massive $42 billion program by the government to particularly connect rural America with optical fiber. So that's something also we're quite excited. Of course, our US facility has started. I'm very proud of what the team has done and the factory we built there. So I'm very excited with how we will grow the business in the US, both from our operations in India, but also now with our local facility.
So you're continuing that momentum from a global strategy towards profitability and higher revenues. Now, Ankit, that's the thing about 5G. It's new everywhere on this planet. You told me about America. What about India?
So I think there's 3-4 overall triggers. One is definitely 5G. I think, there's a lot of work that the operators are doing to do pan-India coverage. Jio's talked about coverage by end of this year. Airtel's talked about completing pan-India coverage by March of next year. So it's fairly imminent. On the back of that, clearly, we think India itself has to get to about 200 to 250 million 5G subscribers over the next couple of years. So we're pretty bullish in terms of the fiber network that would need to get built out. As we've shared before, we're currently at about 30-35% of our towers having backhaul on fiber, which has to grow to about 70% in the next 2 to 3 years. So that's one good trigger. The second part is fiber to the home is also a major priority, whether especially you look at Airtel, Jio, but also other players like ECT. So that's something we believe between 30-40 million homes will get connected in the next couple of years. And the last one, of course, is something we're extremely keen to be part of and proud to be part of is the BharatNet projects, which will create a massive impact to our country by connecting our 6 lakh villages on optical fiber. So that's something that we believe the government will push forward on a capex model, and we will ensure that if we participate, it'll be on the right terms and making sure it's the right fund involvement.
Great to have you today on ET Now, and we'll chat again soon.
Absolutely. Thank you.
Thanks.